Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about DFM Foods, an interesting company which supplies some of the nice ready made food products but is trading at all time lows. So, let's understand what is the business and whether you should invest in the company or not. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about DFM Foods, here's a small request. Kindly support me through Patreon, and once you do that, you'll get a number of articles that I publish on Patreon, which are exclusive on that site for the viewers. And there I put up price targets and also short-term and long-term charts of different companies and discuss about different companies as well as stocks. And you can ask me any questions, whatever you like, on the Patreon network. For only $2 a month is the minimum fees, and once I have more than 100 patrons, I'll definitely start with a education course on investment on YouTube for no additional cost. So kindly go through the Patreon website as well. Now about DFM Foods, it was established in 1983 and they manufacture a number of snack items. So they have Crax as its major brand, and we all know about Crax, and we have been having Crax. If people are in their 20s and 30s, they would remember that they used to have Crax during their childhood days. And Crax is itself a big brand and coming in various varieties currently across India, especially in the rural parts of India. They ventured into healthy snack food recently, about 2 3 years back. The market cap of the company is less than 1,000 crores at the moment, and they also has a brand called Nutcut, which does really well in third-tier cities and have variants of Cracks. As I said, a number of flavors, at least 6 or 7 flavors I saw on the website. So they are putting in variation of their product mix, etc., to combat the competition at the moment. If you look at the financials of the company, the sales have remained flat. When you look at the September or the December number, these are the December numbers, and they have remained flats, where the profit has really gone down by around 73% in the December quarter. Relatively high debt compared to other, you can say, consumer companies, and low promoter holding at around 40%, just under 40% is the promoter holding, which is a deterrent. So these 2 points are real deterrent for any investors to get into the company, and probably these are the reasons why over the last 4 5 years the stock has not done that well, although return on equity for the company has remained robust at around 30%, and the operating profit margin has remained pretty nice at 11%. ROE has been really good, so return ratios has been good, but the problem remained with debt and the kind of performance on the top line that they are producing, that the sales numbers are not growing appreciably compared to their competitors. If you look at the performance of the stock has remained flat for the last 2 years. So around one till the point when this problem with the health issue came about, which is a global health issue, that is global pandemic that is happening in February. Before that, the stock had remained flat over a 2.5 year period. Have nosedived in the last 1 month for sure. So from 240 to 50 levels, it crashed to around 140 150. There was a drip of 40% on the stock, and although the return ratios have been robust, but debt and other factors have really weighed on the company, and with promoters not buying a lot, people are skeptical about the pedigree of the promoter, etc., and not quite investing into the company big time. It is also a very micro cap company, so unless it becomes and comes up with very good sales numbers, the stock is not going to do a lot. So it has produced consistent growth, but the growth is slowing down over the last 2 3 quarters. So one needs to understand that. So it has disappointed over the years those investors who have invested and thought that the company would continue to do really well on the stock front and continue to say produce returns of 20 25% year on year. That has not happened. People try to invest into the company thinking it is a consumer company and producing such kind of snack products, which are very few between. I mean, these are not listed companies. Only Crax is listed, and to an extent one or two other companies which are listed at the moment. But but DFM was not able to produce the kind of results as was expected over the last 5 years from the company or the stock. So there are better stocks available across the board. So consumption space is highly competitive, and I see something like a Britannia, although at 50, 60, 70,000 crore, but doing very good in difficult times. A Nestle for that matter. Then there are also mid and small cap companies like ADF Foods, for instance, Tasty Bite, and there are many other, you can say, food companies. Jubilant Food works with pizza and so on and so forth, which have done well over the years, but DFM has lagged behind. I'm not saying per se a snack food company, but these are all companies which are direct competitors to DFM. Then you take into account something like agrotech food, which means corn agro products, and so agrotech foods is also a competitor, and it has also done well over the last 2 3 years. But Crax has failed, and probably they have lost market share, etc. But the company has not been able to produce the bottom line numbers as was expected. The top stocks are gaining market share, and many better listed companies are available, as I just mentioned. Right now they are gaining market share on every quarter basis and becoming bigger. So these big companies are becoming even bigger. uh, Remember, these all these companies that I was talking about are nearly debt free or completely debt free. So Britannia is absolutely zero debt, Nestle is zero debt. So one has to take into account these things, because it is extremely difficult to invest into a company which is only say 1,000 crore company and yet having a reasonable amount of debt. And low promoter holding is a further dampener for somebody putting money into the stock. If you look at the technicals of the company, then it has broken all near-term levels. So there was support around the 240 to 250 levels, but it just crashed below it post February and in the middle of February, and we went to all the way to 140, 142 levels, which was extremely you can say weak on charts, and that made the charts look extremely big. It was a vertical fall. Yes, there has been some recovery from those 140, 142 levels. We have gone to 180, 187, but there is extreme resistance at around 240, 250 levels, which will be the 200 DMA. So we could see a move, say a 20%, 20, 25% move on the stock, but that may just fail later on. So extremely weak on charts. The 50 DMA is at 255, the 200 is at 240. Need to cross 190, 195 to really be having any sort of semblance of strength. So one needs to be very careful if you want to trade into the stock. So what needs to be done? In my opinion, you need to avoid this company. Normally, I don't say that for any consumption company or most of the consumption companies, but in case of DFM Foods, you need to stay away from the stock. You need to keep track of numbers, and once it produces, say 20-25% profit growth, then you can look at the stock, even if it comes at say double the price currently that it is, because we need numbers on the top line, bottom line to invest into any company. Look for the consumer stocks who are doing well, slightly expensive, but on major declines. You can look at investing into them. And if you are holding it, then you need to sell on sharp rallies and have only 5% or less than 5% exposure to the stock. So this was my video on DFM Foods. Please like and subscribe my channel and hit the bell icon so that you get my video straight away when I post it. Thanks a lot for watching.